Welcome to the Manufacturing Matters podcast with the Council of Industry. Join us as we bring you inspiring stories, interviews, and insights from across the Hudson Valley that will revolutionize the way you think about manufacturing. This podcast is proudly sponsored by PKF O'Connor Davies, a leading accounting and advisory firm dedicated to helping businesses thrive in the manufacturing sector. With their industry knowledge and strategic guidance, PKF O'Connor Davies ensures that manufacturers have the financial insights and support they need to achieve success.
Bob Murphy, Senior Managing Director of PKF Investment Banking. Welcome to the Council of Industry podcast.
Thank you, Harold. Thanks for having me.
So PKF Investment Banking, talk a little bit about the firm.
Sure. So we provide M&A advisory services, and we work with privately owned, family-owned companies in a variety of different industries, including manufacturing and distribution, industrial services. Most of our client engagements are on the sell side, where we're working with business owners and families and selling their companies, sometimes working with them well ahead of time to kind of get them ready and positioned. And about 10% of our client engagements are on the buy side, where we're still typically helping a family-owned, privately owned company acquire another company.
Are those acquisitions strategic? I mean, they're looking to maybe augment or grow through that acquisition?
Yes. The acquisitions are definitely going to be strategic. So they're either looking to enhance their product offering or their services, sometimes to increase manufacturing capability or other IPs technology that they're acquiring. Sometimes it's to expand geographically, but all with a strategic focus.
So talk a little bit about the landscape. I mean, it's been kind of a roller coaster in this M&A world, has it not, over the last few years since COVID?
I used to love roller coasters, but now I can't do them anymore. But I definitely have experienced the roller coaster here the last few years. Just a little history. So the roller coaster starts really kind of in COVID year of 2020, where things really drop out there in that June quarter, September for the most part. And then the fourth quarter of 2020 is a record quarter, just a crazy good year. And 2021 turns out to be a record year with over 20,000 M&A transactions completed in North America. And then 22 drops down about 10%, 23 drops down about 15%. And in 2023, really towards the end of 22 and then all through 23 are really the headwinds. It's the higher interest rates, right? It's the inflation. It's the worry about the economy. It is in 2023, clearly the credit markets tightened up. Okay, so the availability, especially for the financial firms to borrow money, that starts to impact valuations. Then you get a bit of a disconnect between the buyers and the sellers on valuation. So all that kind of led to a bit of a drop in 22 and a further drop in 23. I think the good news is that the last two quarters of 2023 and the first quarter of 24 were all kind of level. So clearly had leveled off around 4,000 transactions a quarter. And then in the second quarter, we saw a slight uptick. And when the final numbers come out for Q3 and Q4, we anticipate we'll see a little more of a tick up. So we think this year we're going to close a little over 17,000 M&A transactions in North America. So up about 3 or 4%. And I think the good news is going into 2025, we think we'll see another tick up in M&A activity, and also with valuations being a bit stronger, right? Now, that's assuming we continue to get those decreased interest rates, inflation stays in check, the election will be over, and then there's just a significant amount of capital looking to get deployed. So in North America, there's close to $1 trillion with financial buyers looking to get invested. And on the corporate balance sheets, there's approximately $2 trillion.
Wow.
So there's a lot of money there. I think as long as the interest rates, can continue to come down, 2025 should be a strong year.
So, I mean, since it is a full disclosure here, as of recording day, it is the day before the election, so we don't know the outcome. But given the uncertainty around tax policy and the clear divergence, is there any anticipation how that would break for the M&A sector? Would it be better for a Republican or a Democrat win?
So, the biggest, I think, impact with tax policy for M&A is the capital gains rate, right?
Okay.
So when you sell your business, you're paying a capital gains on that sale, which is currently 20%, which is clearly a tax that could eventually go up. But I think what most of us are hoping for is a split Congress. And I think with a split Congress, you're not going to be able to move capital gains rates up. Okay, because if you've got the split Congress, probably the only thing you're going to be able to get through is bipartisan bills. And you're clearly not going to get a bipartisan bill driving up income taxes. So,
Right.
We'll have to see. If the Republicans were all in control, then I think it'd be pretty safe. If the whole Democratic Party was in charge of both houses and of Congress, then, you can have a potential increase in capital gains rates.
Right. Okay. Well, that's interesting. You've obviously very familiar with the statistics of the market. Any sectors a little busier than others in that 17,000 M&As you're talking about?
Sure. So food, both on the manufacturing and distribution, most sectors in the food industry have been very active.
Interesting.
There's also a big consolidation that's been going on in HVAC, whether it's HVAC service for sure, both on the residential and commercial side, also HVAC manufacturing and distribution, so that whole sector. There's a big consolidation in landscaping.
Really?
Roofing.
Interesting.
Yes.
Now, I saw a little story in the Wall Street Journal about like the new millionaires,
Yes.
and is that what we're talking about?
Yeah, it kind of is. I mean, back, and I'm not sure how far we'd have to go back, but back several years ago, there was very little activity with landscaping, with roofing, but it's an industry that the private equity firms have really focused on the last few years, and so there's been some pretty big consolidation going on.
Fascinating.
In those sectors, and the other is just anything that has recurring revenue. So certain financial services, insurance, software as a service company, anything with recurring revenue with clear visibility, given some concerns over the last 18 months about the recession, those sectors have been very strong. And I do think, from a manufacturing standpoint, I think overall that will be a strong sector going forward. There's been a lot of consolidation in more of the service companies. There's not as many quality assets. I think there's going to be more in the industrial service and the manufacturing space, especially in certain sectors. If they're looking to nearshore, onshore, will hopefully drive some of those sectors as well.
That's interesting. So obviously we're a manufacturers association, so we're interested in that. Let's play a game here. I am a small manufacturer. My kids don't want the business. I'm looking to get out, go retire. And how much lead time do I give myself? How do I prepare myself to my business to kind of maximize my value?
Yeah, sure. Listen, it's always better to have more time. And it really, how much time is going to depend on the particular company. So as an example, do they have good financial information? Can they generate accrual financial statements timely on a monthly basis? Do they have good systems? Do they generate key performance indicators, business metrics? So it's a matter of, each company's different. I mean, we've got a company that we're literally working with for about a year before we go to market. And we have other clients we sign up and we're literally prepared and in market in 60, 70 days.
Really?
So it depends on that. But having good financial information, having good business metrics, doing some estate and trust planning ahead of time, okay, all important things. And then just getting the right team, right? Getting the right M&A advisor, the right tax advisors around you, just getting all the documentation identified and prepared. So when you do start talking with buyers, you can go through that process without having a delay, running into an issue that then drags things out. And once you start dragging things out, there's just a higher chance that, the deal
Something's going to go wrong.
Something's going to go wrong. It's going to get renegotiated. So you want to be fully prepared ahead of time. So when you do go to market, it's going to go smoothly and timely. And I think in this case, for you as the owner of this company, where the kids don't want to take it over, which is very common nowadays, you just want to make sure you know what you're looking to get out of it. I mean, you want to get obviously a good value and a high value, but is there anything else you're trying to get for your employees or your customers? And you should understand, what you're going to do after you sell it.
Yeah. I thought I stated my clear vision. I was going to go to a warm climate and play golf.
Okay.
So that is a typical scenario. I mean, it is largely like that. There's not a succession plan, or the succession plan is cashing out and selling.
Yeah. I mean, listen, I think it's more common, say today, than when I started 30 years ago in the M&A world. I think for most of the family members, the children are not looking to take over the business. Now, obviously, there's exceptions to that.
Sure.
Okay, clearly, there's actually a company we're speaking with where the son and daughter that are in the business clearly want to stay with the business, and they kind of have a growth vision for it. And so we're working with the family to get them a platform where private equity is going to buy this company platform, right? And those family members are going to stay to drive this to the next growth level. But if you looked at percentages, and I don't have anything in front of me with it, but the large majority are going to get sold to a third party. Because either the children aren't interested, or if one or two of them are involved, they're good at a particular sector, they're great at the technical side, maybe they're great at the selling, but they're not looking to really be the CEO to drive the company.
So let's kind of pick up on that a little bit and look at it from an acquisition standpoint. So the kids do see, the old man's been holding us back, and we see great opportunity here, and they want to acquire a company, maybe like you mentioned, in a different geographic area or a complementary business. How does that process work? Are you just working with kind of playing matchmaker?
So it depends. We get involved in two ways. Sometimes we'll get involved where they are speaking with a target that a lot of cases they know because they're going to trade shows together, or maybe they don't know each other that well, but there's a conversation going on. And so we'll get involved and evaluate that situation. And then other times they might have a few targets in mind, but they haven't spoken with anyone, and we're really running a full search where we're working with them on, well, what's the strategy? Like, what are you trying to achieve? What do these targets look like? How are we going to evaluate them for fit? And then identifying all those targets that could potentially fit, and literally outreaching and speaking with them. So it could be a kind of a one-off, or it could be a full search process. But either way, we're looking at evaluating that company with them for fit. Right? Who are the key people that are very important, and are they going to be staying, and what are the roles? How do the two companies fit together, whether it's from an operational standpoint, a manufacturing standpoint? If it's manufacturing, are you going to be combining those locations, or are you going to be keeping them separate? Are you going to be putting them on the same ERP system? So, understanding who's key at the company, understanding those customers, understanding what the fit is, and making sure, obviously, that it's valued properly and structured, but also working with them to make sure they've got an integration plan. How are you going to integrate this the first 90 days, the first 6 months, the first year, right?
That's a tremendously valuable set of knowledge, just knowing what questions to ask. There's probably, 500 questions that you ask that need to be answered to see if there's a good fit.
Yeah, yes, especially, when the company hasn't done an acquisition before. So,
Yeah.
Just some of the things maybe not everybody would think of, but having done hundreds of deals, you do tend to learn something over time.
Yeah,
So,
well, that's funny. I just think just like compensation, you can imagine all the scenarios where culture's a butt and people are frustrated. As you're talking, my brain's working on all the problems.
yeah, listen, culture. I mean, people always focus on service companies with culture being very important, but it's obviously just as important in other companies. So, getting that culture and seeing what the fit is. And, if it's not a great culture at the target company, well, then maybe you can turn that into a positive because now they're coming into your company with
Right.
hopefully a better culture. Uh,
Yeah.
yeah, you clearly need to understand what you're biting off.
Yeah, but I imagine just asking the question, hearing the answer, talking it through, that's really just recognizing what you're getting into and maybe solving it or addressing it. But again, just recognizing it and knowing, having you as a partner asking those questions of you is probably extremely important for success. On the financing side, then, do you help arrange that? I mean, is that something you coordinate or do you partner with their banks? Do you have resources
Yeah.
yourselves?
So on an acquisition side, if we're working with the client to acquire the company, then we will look at the financing with them. Okay. And help them with their existing bank, or we'll introduce them to other sources of capital. So
Okay.
yes, we clearly will. We're not going to go out and do a big raise to individuals, but clearly there's plenty of capital out there with established firms.
So I'm just a little bit about yourself. How did you get into this racket? Did you go to business school and say I'm gonna be an investment banker?
Listen, Harold, I knew from kindergarten this is what I wanted.
Okay.
Yeah, yeah, no, it's a good question. It's a good question. I started out as a CPA. I was a CPA with E&Y for 5 years, and I got recruited into a public company with all the SEC financial reporting. I was there for maybe 12 months, and they were divesting two companies, and they were so busy that they pulled me in to work on one. So I worked on that, and then there was another one I worked on, and that's really how I started, and I very much enjoyed it. And I stayed with that public company and moved over to corporate development and spent 7 years just working on all their acquisitions, their dispositions, and strategic planning, investor relations in Wall Street. And so that's how I kind of got into it, really being with a public company that was both buying and selling.
Gotcha. And then PKF obviously is also, substantial accounting firm in the region. And how's this relationship with the banking side?
Yeah, listen, it's been great. I've known several of the partners at PKF for over 20 years. I've been doing the M&A for, almost 30 years now. I've known PKF for at least 20, and I started the PKF investment banking group about 4 years ago.
Okay.
It's been fabulous. I mean, it's just a great value add for their clients. And of course, many of our clients are not PKF clients, right?
Sure.
It's a mixture, but PKF O'Connor Davies, they've got the due diligence side to be able to come in and do due diligence. They've got tax structuring people, cybersecurity services. So there's a lot of services there that the investment banking clients can use, especially on the buy side. So yeah, it's just been a wonderful relationship.
I assume you mentioned they don't have to be PKF accounting
Sure.
clients, but I assume that's a good source outside of doing the Council of Industry podcast. How else do you get the word out about these services?
Yeah, so a fair amount is referrals,
Yeah, I would think.
through other accountants, through lawyers, sometimes from former clients as well, making introductions. At the same time, we do a fair amount of webinars. in-person speaking engagements. We write a fair amount of thought leadership articles. So kind of a combination of everything. And once again, having been doing this for 30 years, there's a lot of relationships, and a lot of folks on my team have been at this for a while as well. So there's a pretty strong network of professionals set up.
Yeah. And how big is the team?
It's 7 folks.
Oh, that's substantial. Yeah.
Yeah, it's 7 and growing. We're recruiting right now. So, and always looking for experienced folks to join the team as well. Right now we're recruiting for an analyst and a senior associate.
Good to know. In the minute or so that we have left, we talked a little bit about the kind of the landscape going forward. 2025, let's revisit that. Use the election aside, but you said interest rates are a factor. You see 2025 being a little bit more active year?
So you want me to get the real crystal ball out?
Yeah.
You want the real one?
Absolutely. Because it kind of goes to that one person out there who's listening saying, should I do this now or should I wait?
Yeah.
What do you think with the timing?
I think overall, 2025 will be a strong year. I think the markets will be up 5 or 6% with volume. We've already seen the valuations more or less stabilize and come up a bit. The last 3 deals we took to market that we closed over the last 4 months all had strong reception. But since you mentioned time and Harold, I'm just going to say it is very industry and company specific. So while 23 into 24 was a bit of a down year, there were certain sectors where it was a great time to be out. Mm-hmm. So once again, the timing, it's a matter of what's going on in their M&A market, in that actual vertical or sub-vertical, and how is that company performing and what does their outlook look like. So you've really got to look at the company and their actual vertical sector to say, hey, this is a good time, or you should wait.
Mm-hmm. Mm-hmm. And I said wrapping up, but I'm probably going to go backwards a little bit because I'm curious, all the supply chain, you mentioned reshoring earlier and I didn't pick up on it, but is that an opportunity for buyers? I mean, are there bigger companies out there now that are looking to create onshore reliable suppliers and looking to acquire companies that can be those for them?
Yeah, I think so. I think, once again, it's going to depend on the sector. I don't think it's going to be a huge driver.
Okay.
But I do think it is a driver. I think, once again, everything we've been through with COVID, everything right now going on with the geopolitical situation around the world, I think it all kind of leans into making sure you've got manufacturing capability. And if you're not bringing more into the country, or at least close by, right? I probably see more things go.
Mexico
probably Canada getting a benefit of that. But I think also the U.S. as well. And we'll see where just the whole political situation goes with that, right? I mean, depending who gets in, we could be looking at tariff wars and all that could play into it as well.
Very interesting. Well, Bob Murphy, Senior Managing Director, PKF Investment Banking, thank you very much for being on the Council of Industry podcast.
Harold, thank you. Appreciate it. Forward to seeing you soon.
Thanks.
Thank you for joining us on this episode of Manufacturing Matters, brought to you by the Council of Industry and sponsored by PKF O'Connor Davies, accountants and advisors who understand the unique challenges and opportunities in the manufacturing sector. We hope you gained valuable insights and inspiration from today's discussion. If you enjoyed this episode, make sure to subscribe to our podcast and leave us a review on your favorite podcast platform.